Good afternoon, everyone. My name is John Geminade, EVP of Production here at Angel Oak Mortgage Solutions. Thank you for joining us. We're going to give it about a minute, minute and a half for people to log in. I'll introduce our two subject matter experts. Everything we're doing today is live and on our website. So this is not a PowerPoint. It's not pre-canned. We'll answer questions as we go. We will send out, this is going to be recorded. We will send this out before end of day tomorrow. So again, we'll get started here in about another minute. All right. Still people logging in. Give it about another 30 seconds. Hope everyone's having a great start to their month and year. And I think it's going to be a really exciting year. So hopefully you all feel the same. And that's why you're on here to expand your business. Okay, let's get started here. Again, my name is John Geminade, EVP of Production here at Angel Oak Mortgage Solutions. Today, I have the honor of having two of our seasoned two of our seasoned account executives. Sorry about that. And Jerry Calderon, please introduce yourself.
Hi, good afternoon, John. My name is Jerry Calderon, account executive in the Tampa, Florida, Clearwater, St. Pete area. Super excited to be here with you guys today to spread the knowledge on the bank statement loan, which is our bread and butter, our most popular program here at Angel Oak. I've been with Angel Oak now on 9.5 years, and can't wait to help you guys grow your portfolio and be able to understand the bank statement loan better.
Yeah, thank you, Jerry. And also with us, Steve Arnold. Steve.
Hi, good afternoon, everybody. Thank you, John. I've been with Angel Oak 13 years now, and I'm in South Florida and North Georgia, and happy to be here. And this is my all-time favorite program, and I've been in the industry over 22 years.
Yeah. So just here alone at Angel Oak, you have 34 years of experience just with Angel Oak. So you guys are going to learn a lot today, and hopefully we can help you feel like you're an expert in the business. Again, this is being recorded. Everything we're doing today is live and from our website. So, but before we get into our bank statement program, we're going to launch a poll here, and it's who has originated and closed a bank statement loan in the last 12 months. And while everyone has voted on that, I just want to share some information with you about that self-employed borrower. Self-employed borrowers are the fastest growing segment of the industry. And since 2020, almost to the day, 6 years ago when COVID happened, about 400,000 new business applications happen a month. And that has stayed steady even through today. So there's a lot of self-employed borrowers out there, and we're going to also share with you how to find them and how to market yourselves to them. So I can't see the poll. So can someone share with me what to see?
63% no.
63% no. Wow. So that's a lot different from the debt service coverage ratio program. That has kind of got to 50-50. So 63% no. So thank you, Jerry, for sharing that. So hopefully, we'll make you feel a lot confident today about self-employed borrowers and marketing yourself to them. So without further ado, I think, Steve, you're going to go over the highlights of our programs. So let me get there. Bank statement loans. Go ahead, Steve.
Beautiful. And all that's accessible, as you can see. It's just right on the website. Anybody can reference it at any time. But again, this is my all-time favorite program. I've been doing this for over 22 years, the bank statement product, and it's great. Before we get into some of the highlights, let me just add that the loan amounts that you're going to see on bank statements versus say a full doc loan, if a borrower self-employed was even a qualified full doc based on his tax return amount, the loan amounts are much higher than if they were to qualify on full doc. So that basically maximizes your purchasing power, higher loan amounts, even on cash out refi, it's going to be higher loan amounts, which ultimately gives you more income. So it's for self-employed and 1099 contractors. There is no tax returns. There are no transcripts ordered. Loan amounts are going to be from $150,000 minimum up to $4 million loan amount. It covers all transaction types, so purchases, cash out refis, rate and term, delayed financing, everything. All occupancy types, so applicable to primaries, second homes, and investments. It's 12 months or 24. Business or personal checking account statements. The borrower must be a minimum of only 25% of the company. It's 2 years seasoning for housing events, foreclosure, short sales, bankruptcy, deed in lieu. There's also 1099 options available that Jerry will get into afterwards, which is ideal for your contractors and your realtors. It covers permanent and non-permanent, U.S. citizen, visa holders, etc. allowed. There is a expense factor used, a business expense factor that we use. It's a default of a 50% expense factor. However, with a simple couple sentence letter from any third-party verifiable accountant, bookkeeping company, CPA, tax preparer, depending upon the type of the industry, we can go down to a 15% expense factor, which relates to using 85% of those gross deposits and calling it income. So very aggressive. The term 7-year adjustable or 30-year fixed options are available. And it also includes interest only is available on owner occupied and second homes with a minimum of 680 FICO.
Yeah, Steve, just want to answer a question here already. Hannah's asking, will this be accessible later? Yes, Hannah, we will send this out before end of day tomorrow. So hopefully seeing it again and again, will sink in for all of us. So Jerry, Steve, thanks for covering that. Jerry, go over, just kind of like the 1003 credit. What are you looking for? Because, one of the things we do here at Angel Oak, we pre-qualify the borrower for you on your behalf. So basically, Steve, Jerry, and all our great account executives across the country are basically doing a pre-underwrite. So Jerry, explain what you're looking for in the 1003 credit report.
Yeah, John. So on the 1003 in the credit report, we're going to treat the bank statement loan just as you would any traditional loan. We're going to want to complete 1003 with all the borrower's information on there. The only thing that we don't want on the 1003 is income. Obviously, when we get the 12 or 24 month statements, we're going to have that income calculated for you by our bank statement review team. So what happens is we get the 1003, we get the credit report. It automatically, we don't have to do anything on our side. It automatically goes into the bank statement review queue. And within 24 hours, we'll have that income analysis. If not same day, most of the times it's typically within the same day, we'll have that income analysis for you. So at that point, we'll be able to let you know what the income is. And then if you want to put that income on the 1003, you can do so, or you can still choose to leave it blank. That's up to you. But other than that, the 1003 is completed just as you would any 1003. The assets, the liability, everything is filled out. The employment information. We want to make sure on the employment information, we have all the specifics. So we want the business information. If they're the owner, we want to know that they're the owner of the actual business. And we want the 1003 to be 100% accurate, because that's basically what we are going off of. As far as the credit report, we will use the broker's credit report. So we do need a tri-merge from the broker. Angel Oak is not going to pull credit at the time of submission. So that is going to be the actual credit report that we'll be utilizing. Other than that, that's all that we're going to need for the 1003 and the credit.
Yeah. So Jerry and Steve are going to do all the heavy lifting for you. That, like Jerry mentioned, that income is calculated all up front, and that is used throughout the entire process. So Jerry, what if there was an exception to be made, right? You do that at the pre-qual stage?
Absolutely. One of the great things about Angel Oak is that we have what we call our non-agency department, that's our exception desk. So at that point, obviously, when we cover and we touch base in regards to how to send in for a quick call or pre-approval, we'll touch base on some of those things. But what you want to do is you want to make sure there's a comment section that's on there on the initial quick call. And any exception that you're looking for, borrower's only been self-employed for 18 months versus 24 months, or anything that you're looking for, that's where you'll want to include that. And then what we'll do is we'll have that sent over to our non-agency exception desk, and they'll review that and they'll let us know up front. Typically, we like to get the income calculation calculated prior so we know exactly what we're looking at as far as income goes. And then we want to put any compensating factors that we have with that. Borrower's got extremely great credit, borrower's been owned the business for over 10 years, any of the compensating factors we want to list on there additionally. And then at that point, we'll submit it to the non-agency department, and within 24 hours, they'll let us know if we can get that exception or not.
Yeah, thank you, Jerry. And Steve, Ryan's asking here, is there a significant difference between 12 months and 24 months?
Now, typically, it only comes into play at the higher LTVs, the 85 and the 90. Maybe a slight difference in rate for the 24, but typically 80 and below, there's no rate difference. So we like to go with the 12 months.
Yeah. So Keith, hopefully that also answered your question. It's slightly higher. Steve, what LTV does that happen at? I
believe it's 85 and 90 LTV. The 24 will get you slightly better pricing.
Okay. Thank you. And Steve, just
one thing to add to that, it will come into play if you have declining income over 35% over the 24 months. And in that case, we're just going to utilize the 12 months statements.
Yeah. So, we usually say this when we're going over the quick quote. Our AEs are also like your confessional booth, right? If you can get, I know people like to go the path of least resistance, so you'd rather get 12, but if you can get us 24, Steve and Jerry, they'll tell you which way to go. So, they might have more income for 12 months, or, if it's a seasonal job, right? There might be some time, maybe if it's a landscaping crew that don't have much income during the winter, maybe get in 24 months, we can explain that better as a story for your borrower. So again, let these account executives do that stuff for you up front. Steve, one other question came in here. What's the minimum LTV, Jerry? You might have to look at your matrix here. Minimum LTV for interest only. I don't think there is.
So the maximum LTV is 80%. Yeah. Okay. So 80% is the max that we can go to for the interest only option.
And Steve, why would you use personal maybe versus business, and what's the difference in those?
So if it's a realtor per se, a lot of realtors don't have business titled accounts. They would use the personal. The advantage of using personal, if a business owner also uses and has a business titled account open, is if you can show us 2 months of business account statements, but you're going to use the 12-month of the personal for the income to qualify, then we don't use a expense factor, so there's no hit. So I can use 100% of the gross deposits in the personal account as long as you can prove that there is a business checking account which pays typical business expenses out of it.
Thank you, Steve. Jerry, can you use 2 sets of business bank statements?
Absolutely. That's a great question. So if they own multiple businesses, we can have them calculate the income for business account ending in number 346, and then we can have them also calculate the income for business account ending in 4578. Now, what we can't do is we can't have funds that are being commingled from one account to another. Then they're not going to consider that as income. But yes, absolutely, we can use multiple accounts.
Yeah, thank you, Jerry. And then Steve, what if, I talked about, how many people have become more self-employed. So kind of 2 scenarios here, Steve. One, can a single borrower be W-2'd and also self-employed? And then the follow-up to that, what if the spouse is W-2'd and the other person is self-employed?
Excellent question. The answer is yes to both. If somebody was a wage earner, W-2 at job 1, and also self-employed we'll call it job 2. Yes, I can use his earnings from the W-2 job 1 in addition to the bank statement for job 2. As far as the spouse goes, absolutely, I can use the spouse's W-2 income in addition to borrower 1 husband's self-employed income. So yes.
Yeah. So so hopefully, Ryan, that answers your question. And then Jerry, can you explain the 5/6 arm and the 7/6 arms and caps? This is a deep question here. Thank you, Abigail.
Yeah. So we have, and going back also to the income part of things, John, we can also take the Social Security or pension income and also and utilize that in conjunction, whether they have W-2 or bank statement. But we do offer the 5/6, 7/6 arm, which is our 2-arm products that we have. And then additionally, we offer the 30-year fix with that. The 5/6 and the 7/6 arm, that's something you'll want to get with your account executive to get all the specifics and details on. I don't have the specifics in front of me, but that's a very specific question.
Yeah, the arms, the 5/6 and the 7/6 right now are priced the same, so we qualify that borrower if that's 7-year, and it's also based off the SOFI. Was that right? Yeah, SOFR. Sorry, I'm thinking commercials. Sorry, that's based off the SOFR. So SOFR. So a couple of questions coming in about the 1099, Jerry. So let's go over to the 1099 program and keep the questions coming in. We're not going off bank statements. We're just moving to just a different program. So make sure we touch on them all. So got to move a few things down around here. Like I said, this is live. All right, Jerry, if you could just cover some of the highlights here, please.
Yeah, absolutely, John. So the 1099 program is another great program that we offer here at Angel Oak. We can use the 1099 for 1099 earners, and we don't require any tax returns whatsoever. We can do loans up to $3 million with a minimum loan amount of $150,000. This one can also be utilized for purchase, refi, cash out, refi, rate and term, and even delay financing. We can actually do delay financing on all of our loan programs. So that's something to keep in mind. It can also be done owner occupied, second home, and investment properties. You can do the 1099 program. We don't require tax returns, as I mentioned. We do have to have 2 years seasoning for foreclosure, short sale, bankruptcy, or deed in lieu. What we're going to do is we're going to utilize the most recent 1 or 2 years 1099s plus the year-to-date earnings statement. That's how we're going to determine the income for it. The year-to-date earnings are verified from the earnings statement, pay stubs, or bank statement. So typically, at least most of the ones that we do or that I do, we get the bank statements, the year-to-date statements to back the 1099s up. The 1099s do have to be from a single employer, and they do have to be issued to the borrower's personal name. So they can't be issued to an actual LLC. They have to be issued to the borrower's personal name. And then the borrower must be self-employed, working in the same line of work for at least 2 years for this program with a minimum credit score of 640. And believe it or not, we actually can go to 90% on this program, which is really strong for a 1099 borrower.
Yeah. Thank you, Jerry. So with the P, well, I guess we can go to the highlights of the P&L, Steve. Let's do that, and then because a couple questions here for P&L loan. So, all right, Steve.
As far as the P&L goes, also for truly self-employed borrowers, company owners cannot be 1099 contractors, must be a true self-employed with an entity. Same as the bank statements, where the loan amount is going to be $150 minimum up to the $4 million. 12-month P&L statement, so I don't need calendar year from 2025. It would be the last 12 months, just like the bank statements would require. So a P&L from March 1st of last year through February 28th of 26 will give us the last 12 months. The max loan to value on P&L program is 80 LTV. All transaction types apply, so purchase, refi, cash out, delay financing. And again, the same with occupancy types, all occupancies, owner, primary, second homes, investments. The P&L can be as simple as just a one-page P&L. It'll be prepared and signed by the borrower's third-party accountant or CPA or even the tax preparer. Same housing event seasoning, 2 years required on that for short sales and bankruptcies, etc. And if they had a score, the threshold is the 720. If they had over a 720, then there's no bank statements needed, just a one piece of paper, P&L, and that's it. If the score is less than a 720 mid FICO, then we just simply require 2 months of the business bank statements to help support the gross deposits that are being reflected on the P&L. Very simple.
Yeah,
program.
so hopefully, Matt, that answers your question, because Matt's question was, would the P&L be in lieu of the bank statements? And as Steve just mentioned, it's based on a credit score. So great questions coming in here. Steve, what would be the reason to use, we're going to jump around from program to program now as the questions come in. What would be the reason you'd use God, I just went blank there. Why would you use a P&L or a 1099 in lieu of bank statements?
So to use a P&L in lieu of bank statements, and I get this a lot, is let's just say they have excessive overdrafts and NSFs and it doesn't meet our program requirement, which is still very, very lenient, then I would flip it or suggest we do a P&L, because then there's no overdrafts or NSFs that may come into play, which is one great thing. And also, if maybe the borrower had multiple bank statements, or perhaps it's a cash business and they didn't deposit a lot of their deposits, so the bank statements didn't show very strong, the P&L would come into place perfectly to replace that.
And thank you, Steve. And Jerry, Steve mentioned, CPA, tax preparer, when do you need, like, for just even for bank statements, when do you need to have, say, a CPA letter or a tax prepared letter to support an expense ratio?
So we always want the CPA letter for several reasons. Reason number one is we want to confirm the borrower's actual percentage of ownership in the business. Okay. So the CPA letter will let us know that the borrower's either 100%, 80%, or whatever the percentage of ownership that they have in the business, because we need that specific percentage in order for the income calculation for the bank statements. And then additionally, that CPA letter can confirm to us that the borrower has been in the business, has been in place in 2 years or longer, or they've been self-employed for 2 years or longer. And the last reason, and typically the most important reason why we need the CPA letter, is to verify the borrower's percentage of ownership. Okay, we all know, like Steve mentioned earlier, we default to a 50% no matter what. That's what we're going to default to. You get a 50% haircut of your total deposits. So if you have $1 million in deposits, they're going to give you credit for $500,000. You divide that by 12, that's your monthly income. But in the event that we get that CPA letter, and the CPA letter lets us know their true percentage, because most businesses aren't operating at a 50% expense ratio, or if they are, they're, that's a large percentage. But if we get the CPA letter and the CPA letter says that their expenses don't exceed 30% of the gross revenue, now we can actually utilize 70% of the deposits. So it just enables the borrower to have more income for them for qualifying purposes by getting that true expense ratio percentage on the CPA letter. We're not looking for anything on the CPA letter other than, and like you mentioned, it can be a CPA letter or tax preparer, but we do have to have it on a company letterhead. We will verify that they do exist and have a tax identification number. Other than that, that's all that we want to know from the CPA letter.
Yeah, thank you, Jerry. And then Steve, there was a question here, and you mentioned it, being self-employed for 2 years. But recently, Steve, we just rolled out the 1 year self-employed. You want to add to that?
Absolutely. So if you're only self-employed business owner of the entity for only 1 year, perfectly fine, as long as you have that 720 or above FICO and you have at least 2 years in that industry. So if you were a W-2 wage earner working for a roofing company and just opened up your own last year, for example, perfectly fine, as long as 2 years industry experience, even as a wage earner, and then 1 year proof of the entity formed, it's fine.
Yeah, a couple of other examples. Steve mentioned a roofing company, doctors, attorneys, they were W-2 and now they went out on their own, right? As long as they have that 1 year, same line of work as Steve mentioned, we'll be able to do a 1 year self-employed borrower with the 720 score And I'm sorry, Steve, if I missed it. What's the LTV on that?
Oh, maximum loan to value on that for the 1 year is going to be 80.
Okay, thank you. So, a couple other questions I have here. So Jerry, will you do a prequal on a TBD address to be determined? So someone wanting to shop for a house ahead of time, will you do a prequal off the credit report and the 1003?
We certainly will. Yeah, we will do it all day long. I do it all the time for some of my other accounts. KB Homes, for instance, comes to mind. There's several other accounts that we do at the initial pre-qual stage before we have an actual subject property address. And that gives your borrower the knowledge and the comfort of knowing that they qualify with XYZ income. So when they go into actually put a contract on a purchase contract on a home, they know exactly what they're qualifying for on the front end.
Yeah, and Jerry, that's huge. I mean, having that comfort of knowing that's the income that's going to be used. And, you know, we, Steve and Jerry, both know how important your referral sources are to you. So, you know, doing that heavy lifting up front is great. And it makes the process so much smoother. But, Steve, what are some of the questions are slowing down here? And we'll go into some of the tools we have, because a couple of people have asked about rates. What are some of the biggest questions you guys get? And Steve and Jerry, anything that hasn't been asked here yet?
Well, you mentioned it before. We're doing all the heavy lifting for you. You're basically just supplying the information and an accurate application. We're going to give you, like John mentioned, a pre-underwrite. We're going to do all that in advance. We're going to figure out the payment shock, the housing payment shock, the residual income, and all this is done on the front end with, you know, through our pre-underwrite desk. So, I mean, it takes the worry and the unsurety out of it. So I would just say, you know, go get these types of borrowers, and I'll talk about it later on some of the marketing things. But it's an easy program. Let us help you and hold your hand through it. We've been doing this for so long; it's second nature to us.
Yeah. And sorry, Jerry, go ahead if you were going to say something.
No, just to piggyback to what Steve said. I mean, one of the common questions. I mean, the poll said it in the very beginning in itself. 63% of you guys have not done this loan. And one of the questions I always get, well, how difficult is this loan to do? And to be honest with you, it's the simplest loan to do. I mean, aside probably from a DSCR loan, but it's the simplest loan to do because you have to do nothing other than just provide the bank statements. We do the income calculation for you. And at that point, you know, most of the times you end up finding out that your borrower qualifies for more of a loan, a higher loan amount than they would have had they gone the traditional route.
Yeah,
so I think it's just a lot of it, John, just comes with people that, I will say, I mean, Steve's been here well over 10 years. I've been here almost 10 years. And I will say when we first started, it was a difficult deal. You want to know why? We had to calculate the bank statement income one by one ourselves. and it was difficult, but this loan has come so far nowadays. And it's to the point where it is just a very simple loan to do. And if you're not doing it, your competitors are, and the borrower's going next door, and then you're losing on your referral sources and everything else that comes across with it.
Yeah, and I want to touch on Steve said earlier, and Jerry just said, I've seen it. You can increase a borrower's purchasing power by 3 or 4 times. You know, you have a borrower that makes, you know, like Jerry used it, $1 million a year. I bet you if you looked at their tax returns, they're lucky to maybe make $100,000 a year. And as Jerry used, even at a 50% expense ratio, that's $500,000 a year. So do the math, right? So you've increased that borrower's purchasing power by 5 times. So it's really, really powerful. Abigail, don't apologize for asking a lot of questions. I think we're going to take your question regarding the bank statements and the P&L. We're going to take that offline. So but it's a great question, Abigail. So we're taking it offline. So, all right, guys, we're halfway through this. We want to talk about, Tammy's asking how long does borrower have to be self-employed? As we mentioned, 2 years for to go to a 90% LTV, 1 year if they've been in the same line of work for at least 2 years. So 1 year self-employed, but in the same line of work as Steve used, a roofer, maybe worked for a company, was W-2'd, now wants to go out on their own as 1 year self-employed. So Tammy, hopefully that helped answer. One other question, Jerry, Lisa's asking, any prepayment penalties?
So we only have prepayment penalty on non-owner occupied investment properties. Otherwise, no prepayment penalty. And one thing to also add to John, for those loans that are going to 90%, that is one loan with no PMI. So do keep that in mind that anytime you're going over 80%, we don't have PMI on any of our loan programs.
Yeah, and Jerry, that brings up a good point. I think we've been doing this so long, we just assume everyone knows that, but it's so true, you know. And Steve, that brings me to the next question that usually pops up is, do we allow gift funds?
Yes, we do. If it's a primary, the borrower just needs 5% of the own funds. If it is a investment, the borrower needs 10%. And then the reserve requirement that the borrower must have is 3 months only for reserves. The rest could be gift from a relative family member.
Yeah, and that's big, Steve. That just changed less than, I think it was probably just a year ago. That's pretty big, the reserves. And I'll answer Matthew's question. Matthew, this is being recorded. We will send out the recording no later than end of day tomorrow. And then these are not summary sheets. Everything we're doing today is on angeloakms.com. So that's the website, angeloakms.com. So, all right, guys, we're going to jump into, the quick quote tool. I'm going to go back to the homepage so people know where we're going to get. So Jerry, kind of direct me in how to do, because people have asked about rates. So everyone's rate sensitive these days. So let's do a quick quote and then how to submit that 1003 and credit report.
You got it, John. So the non-QM quick quote, it's a great tool for you guys to utilize. If you haven't used it before, it is super user friendly. It is extremely easy to utilize. John and I always joke because I like to say my daughter will go on here and price out loans. It's so simple to do. She started doing it when she was 6, but now she's 10. So, but it is just user friendly for you to go on there. You don't need a user ID or password in order to go on there. And you can actually have your account executive send you the link, and you can actually put it on your phone so that if you're out on the road at any point and you want to just get general pricing on a loan scenario, you can go right on there and do it. It's on the main web page, and it says the non-QM quick quote. And what you do is you click on that. Again, you don't need a user ID or password, and it's going to ask you 2 questions. To select your channel type, it's either broker or non-Del. Most of you guys are going to select broker. Then after you select broker, you're going to select the loan program that you're looking to do. In today's 7th webinar, we're going to look at a bank statement scenario. So you would click on the bank statement. Here's where it would give you any kind of updates. It's just telling you to check out our pricing on our 6 arms here, and then you just click on continue. Once you do so, it's going to take you to the main page here. If you need to change the loan program for any reason, you can, but it's already on the bank statement program that you selected. You enter the loan amount, the loan value that you're looking for, the transaction type, the credit score. And then you would also enter the occupancy, the housing history. Here's where
Jerry,
I'm going to interrupt.
Sorry, Jerry, I'm going to interrupt you for 1 minute just to give people a kind of, basically a summary of our borrower, right? That self-employed borrower averages a 735 score to 740, and their LTVs usually in the 70s. That's what our average runs across the company. So I just wanted to share that, Jerry.
Yeah, that's a great point, John. But anyways, you put the housing histories, if you have any lates, the occupancy type, the property type. Angel Oak will go up to as high as 4 units. So do keep that in mind. Property state, you want to select what loan that the state is being in. Then you're going to select the amortization type. Like we said, you can do 7/6, 5/6, or the 30-year fixed. The interest only option is also on there, should you choose to do so. Income documentation, here's where you would click whether you're doing personal bank statements, business bank statements, P&L loan, or whatever you choose to do. This is where you would click it on. The lock duration, I typically suggest brokers just leave it on 30-day. And then compensation type. We have 2 ways of compensating you here at Angel Oak. It's either borrower paid or lender paid. So you would select the compensation type that you want to choose for. or go for it. And then if you want to escrow waiver or not, you would select so on there also. The moment you do that, you will get the pricing that's going to show up instantly on the right-hand side. Okay, so it's as simple as that. You just filled out a couple of the questions, and now you have pricing that you can go back to your borrower. In this particular scenario, we see that 6.374. Yeah, that's correct. 6.374 on a bank statement loan. That is the interest rate for the people that were asking about interest rates. That's what these loans price out at. That's a super aggressive for somebody that does not prove their income and is looking to qualify off of bank statements alone. But once you select the actual interest rate that you like, then it's going to take you to the next step, okay? Which is where you would just put all of your account executive information. If you don't have one, select me or Steve. We're glad to get you taken care of. Put your loan officer information and your company information all on the bottom there. And then this is the comment section that I was referring to at the very beginning of the call. Okay. Here's where you want to communicate anything possible to your AE that you want them to know about this. Okay. Borrower switch from bank account 3467 to account 8497 in June of last year. Okay. When we see that, we now know when we send this to the bank statement review team that the accounts had switched, the term when it switched, and we can also reiterate that to them. Okay, then you're going to drop the 1003. Like we said, a complete 1003. You don't put income on the 1003. We're going to get that for you. And then you're going to drop the credit report. The credit report is a tri-merge that we'll require from your side. Okay. Then once you do all of that, at that point, you're going to submit the loan. We obviously upload the 12 months bank statements or 24 months bank statements. And then we do have a document that we call the bank statement questionnaire. It's just a very generic document that lets us know a little bit about the borrower's business. And that is also sent to you at the pre-approval stage. So you can have it filled out prior to, or you can have it filled out after you get the pre-approval. And then any additional documentation that you want to provide, if the borrower, for instance, is a permanent res or something, and you want to provide documentation to verify that, you could do so, or any other documentation, you just upload it here. And then once you do that, you click on the blue button that says submit, and voila, simple as that. Your pre-approval is in the hands of your AE.
So
most of our account executives will get to your pre-approval within 24 hours. If they don't, usually they'll get it back to you on the same day.
Yeah, so two things, Jerry. One is the loan officer locking the loan at this time?
They are not. This is just for pre-approval. We call it a quick qual. So technically quick qualification, but in the broker world, this is just a pre-approval to know if the borrower qualifies or not for the loan.
Yeah. So, and one other thing, Jerry, I wanted to mention here too, and it's pretty big, and it's because I had one years ago. We also, I know we put in their housing history. We do allow a 1x30 on our bank statement program. Just so if you're doing, I think it's greater than an 85, you have to be 0x30. But that's big. That's saved a real life scenario. That saved the borrower because she was paying off her original primary, and the title company she used did not wire the funds. They mailed it via USPS, and she ended up with a 1x30 on her mortgage. So just again, if you have any scenarios like that, that's why it's so important to reach out to your account executive, because they're going to know answers to 100% of your questions. So Jerry, thank you for doing that and taking us through there and helping us with that process. So Steve, I'm going to go back to the home page because we've talked a lot today about how to market to these borrowers and where do we find them. So take me through the process, Steve.
Okay. Before we do that, I just want to share with you, I left the house the other day just for an hour and a half just to do some errands. And I thought about it this morning. This is how many people that I actually touched or saw that would apply to these programs. Yeah. So I just drove about 2 miles away to the local UPS franchise-owned shipping store so I can mail my tax docs to my accountant. So there's one business owner. I walked 3 doors down in the same center to make a haircut. As you can tell, I need one. So I made a haircut appointment. My hairdresser's $10.99, so there's 2. On the way back home, I passed my State Farm insurance. I needed to add insurance for a new vehicle I got for my son, so there's 3. I picked up a Jersey Mike sandwich on the way home, and those are franchises, so that's 4. And then I took an incoming call from my friend who's a realtor in Florida to try to convince me to sell my beach condo as my vacation home, wanted to list it. So that's 5. And then I thought about it that this week I'm going to the local plant nursery to buy some more trees. And then next week I have an appointment at the vet for my pet. And then also I'm getting my oil change. So that's really like 8 self-employed 1099 people that I thought about that I'm going to touch within just a couple days. It's crazy.
And Steve, I'll give a perfect example. I had my car, work on my car being done, so I had to rent a car. So the guy was so nice at the car repair shop. He said, "I'll follow you to return the rental car." And on the way back, we started talking, and he's going to be reaching out to me probably today because he's interested in buying a house. So yeah. There you go. If you keep your ears and eyes open, you'll find them anywhere. So I love it, Steve. I love it.
All right, so for the marketing portal, to access our dozens of complimentary, professionally prepared media, you're going to simply log in, and if you don't have your login, your credentials, you'll reach out to your AE. As long as your company is set up with us, which is an easy process, we can get you personal credentials within usually the same day, just a couple hours. So you're going to log into the portal.
What? Uh-oh, here we go.
You got to remember your password.
Like we said, this is live. All right, this should do it.
John hasn't done any marketing anytime soon.
Easy, Jerry, easy. All right, so we're logged in, Steve.
You're logged in, so perfect. So you're going to see marketing portal right there at the top. You're just going to click that, and you'll see presentations, flyers, social media, whiteboard. I love the flyers. If you want to click on that, let's show them an example of the flyers. You can easily customize with your own information. They're all basically white label, so they're not going to display or show Angel Oak. It's going to be your information that, and go ahead and pick one, John. We'll show them. You can print, you can download, you can email them and use it for various marketing purposes. You're simply going to enter whatever you want it to show for your contact information, and it's going to automatically populate on the right-hand side so you can see it and review it, and then you're going to download that. And again, I've got loan officers that get them professionally printed. That just save them to their desktop and blast them out, that post them on their social media. A lot of various easy ways that you can do this. And it's marketing yourself, our program, but again, you can see it's white labeled. Our name does not appear anywhere on these flyers. Steve,
how much does this cost a broker to use?
Absolutely free. We have a professional marketing department that prepares all this. There's absolutely no cost at all to you, so take advantage of it. They work.
Yeah, and Steve, if you, I've seen people co-brand this. It might be at an open house, right? So you co-brand the realtor and the loan officer. And if you change your contact, if you put your contact information on one of these flyers, it's going to populate all the other flyers we have available.
Correct.
Yep. So Steve,
I've got a lot of loan officers that volunteer with the realtors. They do open houses. They may spend an hour or two on the weekend with these flyers and do open houses. It's a great way to market yourself.
Yep. So Steve, let's talk a little bit about social media because it's all the craze, right?
It's the craze, and I'm still trying to learn it because I'm old. But
you and me both.
It's a work in progress, but it's fantastic what we offer here. You can see, you can click on one of them, John, and just show them what it looks like.
I'm just going to scroll down, Steve, and just like the bank statement. The perfect example here, Steve. Bank statements catered towards borrowers, and we have bank statement content catered towards realtors, right? We've done all the heavy lifting for you. So if you want them do social media towards borrowers, or you have a list of social media connections for realtors, we've got this for you. It's pretty easy. It's for Instagram, Pinterest. We have them for LinkedIn and Instagram. I mean, we have them for all of them. So you don't have to go recreate the wheel. And, you know, we are on our website, the homepage of our website, serving underserved borrowers. I truly believe this marketing portal is one of the most underutilized marketing portals in mortgage industry, and it's so easy to use. So kind of, I get off my soapbox there, Steve. So, and then Steve, last but not least, I know you've done a lot of these. Jerry's done, all of our account executives across the country have done these. Talk about realtor presentations.
Absolutely. Yeah. Just have fun. Go explore on there. There's realtor presentations. Again, you're customizing, you're white labeling them. You can schedule presentations at your local realtor office and present yourself and the products that you could offer. And again, our name's not mentioned. You're gonna present that you can handle, and you can take care of their clients with bank statements and 1099 and P&L programs, DSCR, etc. You're just marketing yourself, and all the tools are there. It's all free. It's right in front of you. And if you do want to schedule a Zoom meeting or some sort of webinar with the realtors, reach out to your local AE. He or she would probably be glad to jump on the call with you, or in person if it's local, and help do them with you or for you.
Yeah, and you know, so we talk about realtors and realtor presentations. Of the loans we close on our bank statement, 1099 or P&L loan, 9% of the people we close loans for are actually realtors. So do the math, get 12 or 13 realtors in a room, and you're going to get one of their loan. And if you don't get their owner-occupied loan, because Steve or Jerry or any other account executives present on your behalf, you'll probably maybe even get a debt service coverage ratio loan out of that too. So it's really powerful information. 63% of you on this call have not originated a bank statement loan. I can probably guess, I'd say it's probably close to 80 to 90% of the realtors out there don't know these loans exist. So take advantage of it. I know we're getting close to the top of the hour. Jerry, anything to add regarding marketing?
Oh, John, I think the marketing speaks for itself. I mean, for those of you who haven't used it, I'd encourage you to strongly start utilizing it. It's all there for you guys. And the realtor presentation, like you mentioned, it's so strong. Every time I've done one, I've never come out of there where the broker hasn't gotten a loan out of there.
Yeah, Jerry, well said. The other, I was going to say one other thing, lost my thought. Talk about
John. One thing we didn't touch base on, but I'd like to, while we have a few minutes, is touch on is that the bank statement program is just one of many programs that we offer here at Angel Oak. And on the bank statement program, we now offer bank statement HELOCs, which is something that for that 47% that has originated a bank statement loan before, you probably have a borrower there that'll qualify for a bank statement HELOC now that's sitting on 30, 40, 50% equity and would like to tap into some of that equity. And it's the same exact loan. They're just now doing it as an actual HELOC option. So that's something in today's market with all these people sitting on the equity and they don't want to touch their 3 or 4%. Well, guess what? Tap into that equity and make that equity use for you or work for you by doing a bank statement HELOC. And it's the same exact loan process as you would have done when you did regular bank statement loan.
Yeah, Jerry, thanks for adding that, Jerry. And, you know, a lot of your self-employed borrowers want to reinvest in their business and grow it. So why not, you know, hit that equity that you currently have in your house? And I think there's a stat out there since 2020, homes across the U.S., and you guys are in Florida, homes across the U.S. have appreciated by 50%. So imagine all that equity that is in there. So, yeah, thank you for mentioning that, Jerry. That was not part of the script. And like I said, this is live. So, but anyway, Jerry, while you were speaking, anything in closing, Jerry, you want to share?
I think, John, the biggest thing is that non-QM has come so far in today's market. And Angel Oak, we're the pioneers. We are the true pioneers of non-QM. We started this, and just by you guys, like John mentioned, there's over 30 years of experience just in this panel alone. We have very seasoned account executives all throughout the country that know non-QM inside and out. And my suggestion is, if you're newer or just don't know where to start, or want any suggestion as to start, reach out to your account executive. Their job is to assist you and to try to help you to close more loans. You trust us enough to put your paycheck in our hands. We want to make sure that at the end of the day, you have a satisfied customer and that you get your paycheck the way you should have gotten it, and that the experience is the way that it should have been. And that's something we take pride in here at Angel Oak. So don't shy away from these loans. Reach out to your account executive, and you'll see that these loans are simple to do. And if you're not doing them, the borrower, like I said, they're going to go somewhere that is being done. And you're going to lose a referral source. You're going to lose a client that you could have built a relationship with and you could have established by just shying away from doing a loan that really, really isn't that difficult to do.
Yeah, Jerry, your account executive is going to hold your hand throughout the entire process. And I'll bring up one stat here. The Mortgage Bankers Association is saying that 2026 is going to grow over 2025 by 7%. If you're not doing non-QM, you are losing market share, because non-QM space is going to grow by a minimum of 30% this year. So I would encourage you all of you, to reach out to your account executive. Get started now, because like Jerry said, we have a lot of great programs. Debt service coverage ratio is one that you can get off and running quickly. Like Steve says, he's got 8 appointments over the next week. There's 8 self-employed people that he's going to see in the next week. I could imagine how many of you on this call are going to see the same amount of that. So carry flyers in your car. One of our account executives says, where do you find a self-employed bar? Open your front door. Steve, anything in closing?
No, very well said, Jerry. Just perform on it. Just go out there and get them. And again, if you're a little timid or a little shy or scared, just pick up the phone and call us. Call the AE. Again, this is second nature. I can do this with my eyes closed. It's kind of fun. But take advantage of it. The business is out there, and I think John mentioned earlier that the amount of gig workers and self-employed folks are increasing significantly from the past. So it's only going to grow and grow.
Yeah. Thank you, Steve. Thank you, Jerry. Just so everyone knows, this was being recorded. It will be sent out before end of day today. If we didn't get to all of your questions, and I think we got to most of them, we will have your account executive reach out to you. So if you've closed a loan with Angel Oak, thank you for your business. If you haven't, please give us a shot. And thank you for your time today. Steve, Jerry, thank you again. You guys are consummate professionals. Really appreciate you giving up your time. So you guys have a great day, great weekend, and hopefully a great month. Thank you, everyone.
Thank you, John. Thank you, Steve.
Appreciate you guys.
You guys.